The views and opinions expressed by guests are solely their own and do not necessarily reflect those of the hosts, the show, its producers, affiliates, contractors, employees, or any other associated entities. No endorsement is implied.
Elegant. Successful. Beautiful. Classy. Unique. Purpose. Empowered. Strong. Overcomer. Free. Powerful. She rises.
Hey there, and welcome to Successful.
Beautiful.
And
I'm Natalie,
I'm Nikki.
I'm Tanika.
and we are excited that you are back with us again.
Yay.
Okay, so you see that we have the same stuff, right? So we had to do a part 2 because this information is super powerful
Yes.
and we've learned a lot.
Yes.
I've been challenged
Mm-hmm.
some. It's a lot of information. I'm going
It's
to
a
read
lot.
the bio.
Mhm.
We're going to jump in. No fluff. We just getting in here.
Yes.
So our guest, Errol Myers, he's back with us, the financial guru, if I might call him that, because I want to and I can. Yes. So Errol Myers is a broker owner of a financial services firm that specializes in investments, insurance, and debt elimination strategies. While pursuing the completion of his bachelor's in finance at the University of New Orleans, he began his career in finance in 1993 as a bank teller. His transition into the world of financial planning 2 years later when he obtained his life, health, and accident insurance licenses. He added other industry licenses, including securities licenses in Series 6, 63, and 26, and variable annuities in 1997. He also added his property and casualty insurance license in 1998. Errol has been a successful financial advisor and entrepreneur for over 31 years by helping over 1,000 clients implement plans to achieve financial success. He manages over $20 million of clients' investment assets. His business currently spans 10 states, and he has an agency of 35 advisors that he mentors and trains. Errol is passionate about financial literacy and helping people understand the rules of the money game so they can use their money more wisely. Help us welcome Errol Myers back.
Long time no see.
Right. We are excited. We had to keep going. We couldn't let him go. It's like, wait. We need more information here. So we're just going to dive in. We have tons of questions. We talked a lot about finances and some other things in the last show. If you didn't see the first one with Errol on, go watch that one first and then come to this one. But watch both.
Yes.
And if you haven't subscribed, be sure to go do that too. Thanks. Okay.
And like and share.
And like and share.
Like and share.
All
Yes.
the things.
All the
Yes.
things.
Yes. Nikki, you want to start?
Oh,
The
sure.
questions?
Yes. Thank you. Thank you so much. I'm so happy to be here today. Thank you, Errol, for
The
joining
chemistry
us
is off the
again.
chain. y'all are wild.
My first question is, I know that Natalie mentioned in your very expansive bio that you also do debt elimination.
Yes.
Can you
Help
share
people
a
with
few
that.
of those strategies with us?
Well, yeah, and I like to focus on a plan.
Okay.
Mainly the plan of, as I mentioned in the previous conversation, was you got to stand on the scale
Mhm.
to see, that size everything up, right? Sometimes people are juggling for different reasons, right? We talked about divorce and all of that stuff. Sometimes you have to get into debt sometimes to get out of it, right?
Mhm.
But it's such a trap that is difficult. And so to get out once you are in. And so you have to come up with a strategy and a plan. And so that's what I kind of focus on. I'm not, one of those, hey, just leave it alone and ignore it and it'll
Right.
disappear. I'm more of, okay, where are we?
Mm-hmm.
And if you keep paying those bills the way that you currently are, I'm going to show you how long it's going to take.
Mm-hmm.
And that usually is eye-opening because we think, oh, man, I can just pay it down $50 a month. No, that can take years, sometimes decades, to be honest. And so that's the first thing, is just understanding, what are you doing right now? What's your balances? What's your interest rates? What's your payments? Here's the answer. This is when it's going to be paid off. Now let's come up with the strategy. And I rely on the computers. It's not me just doing it. I can enter that information and it'll say, hey, let's attack this one bill first. Let's knock that out. And then it's like a snowball technique,
Gotcha.
right? And now that payment is no longer going towards the MasterCard. Now let's roll it on to the car note. And let's get rid of that faster. And now that frees up $600. And then let's apply that to the next one. And usually it's a snowball technique. And so sometimes you don't have to have a lot of extra money to dump on the debt. But if you have a strategy, you can still get out of debt faster. And so it's just kind of looking at those things. And I mentioned, like with mortgages, doing biweekly and things of that nature. For certain people, you can actually do that with credit cards. Like you don't have to wait until the due date to pay. The sooner you do pay, it reduces the charges of interest. And over time, that can save you 6 months or a year in some cases. So it's just figuring out a strategy, sticking with it. And you might get off the strategy, but even if you get started and can do it for a few months or a few years, that's still better than doing it like they want you to do it.
Yeah. That's really interesting. I'd definitely heard of the snowball effect, but I don't think that I ever heard of it like incorporating other debt into it. It's always been taught about credit cards. Like you start with the one with the least amount owed, I think.
Yeah, it's different schools of thought. Some people say the biggest balance. Some of them say the biggest payment. Some might say the largest interest. So it just depends. But yeah, you can apply that to any debt that you have.
That's interesting. I never thought about that.
Yeah, even the biweekly part. If you got a car note, it's $400. Send them $200 every 2 weeks.
Yeah.
Instead of the $400 every month, if you can. You know what I'm saying? Because the faster you reduce the principal on your balances, the less interest they can charge on the overall balance. So even on a credit card, you can see a big difference doing that on a credit card. Like the average household credit card debt now is, when you add them all up, it's over $25,000. So you might have a $10,000 balance on a credit card where you're spending $300 a month. Or maybe pay back $150 every 2 weeks instead of waiting until the $300. And instead of maybe adding extra money. Sometimes you don't have the extra to do it, but then there's still strategies that you can employ.
That's good. So I have a question, specific one, because you just mentioned in regards to like the biweekly payment on a vehicle. So if you, have the $400 car note, you pay $200. Do you put it toward a specific part of the note, meaning the principal or the interest, or how do you do that?
If they allow you to, again, depending on your lending institution, they may allow you to apply it directly to the principal or not.
Okay.
But even if you can't apply it directly to the principal, them receiving that payment sooner reduces the balance.
Gotcha.
And also, just on that note, when it comes to mortgages, you have to be careful. Some, even if you just if you just say, okay, that's a good idea, I'm just going to start sending the money in. Certain mortgage companies will not apply your payment until they receive the full payment. So even if you're sending it in every 2 weeks, they may just hold it and not apply it. So you have to really have a conversation with that mortgage company. Hey, when I send you this extra money or this half a payment early, is it going to apply right away? And they'll tell you. And if they don't apply it right away, then in that occasion, it may not be beneficial because I'm going to give you my money. I want you to apply it.
Yeah. Because what you're doing with it.
That's right. I can hold it myself.
Right.
Exactly.
Okay.
Yeah.
Okay. Yeah. What you got, Nick?
Oh, okay. So I had a few questions about insurance products or investment strategies.
Okay.
Can you share insurance products or investment strategies that can help me and others catch up on retirement savings?
Sure. I'm of the belief when it comes to life insurance specifically, right? That it should be used for that, not as an investment.
Okay.
And depending on who you talk to, they might have a different opinion. I believe life insurance is based on how much money you want to leave to your survivors, those that depend on your income, not necessarily funeral. We know there's going to be final expenses, but at the end of the day, that's probably 25 or 20,000 or less. If you get cremated, maybe 6,000 or whatever, right? And some people might want their bodies flown to different countries and, all of that stuff. But $25,000 cover a funeral. But life insurance, I mean, I'd rather a person have that than to not have anything, right? Let's not do the GoFundMes. But in addition to that, then the consideration is, do I have kids dependent upon my income right now? Do I have balances on debt that I don't want to leave to those that I'm cohabitate with, right? And so that's when and where maybe the higher amounts become necessary.
Okay.
And so insurance should be just to take care of that. It's not an investment, right? It's not investing. That's to take care of those responsibilities. And it may be for a parent. If you're a caretaker of a parent, you become an angel, the parent's still here. Who's going to take care of them? They need some income. And so the life insurance policy can provide income for that reason. Investments, in my opinion, should be handled separately from your life insurance policy because of fees attached. If I want to invest, I don't want to buy something in addition to the investment. Let me just get the investment, because the fees that you pay is minimizing the growth of the investment.
Right.
Right. So I believe in keeping them separate. And there's probably a reason that you should have one or both at some point in time. Ultimately, as time goes on, this might be controversial a little bit, but as you get older, that's really, and you might think as I get older, I need more insurance because I'm closer to, the final curtain call, right? But in reality, as you get older, you probably have less people dependent upon you.
Right.
So if that's the reason you need insurance, that will be the reason that you should need less of it. And insurance is just a money substitute. If you hit the lottery, $10 million, how much life insurance do you need? So you don't need insurance, because funeral homes, FYI, insurance, funeral homes, they accept cash. They accept any form of payment, right? So you don't have to have insurance to have a funeral. You just need money. But most people usually don't have that amount of money, lump sum set aside just for that. So that's where life insurance then become a need, in addition to income replacement, more than final expenses.
That makes sense. Yeah.
Something that you taught me before my mom passed, I had reached out maybe a couple of years before she passed, and I was telling you that she had like a very minimal life insurance policy. She had a whole bunch of stuff set up that we didn't know about. Once we finally had the discussion, we figured out she'd already taken care of everything, which was a huge blessing. Thanks, girl. But I reached out to you to see kind of what we could get, because I had the mindset we need life insurance for her, whatnot. And you had told me that the older you get as well, the less amount that would be available to her too, or to them, I guess. Can you talk a little bit about that?
Well, the reasons is because, number one, the sooner you get life insurance, the better, because it's cheaper the younger you are. And also, it isn't something that you just buy. You have to qualify for it, right? Health-wise and things of that nature. And some policies limit, since they know if you're older, they limit how much you can get from them, because they're thinking, hey, we might not have enough time to collect enough premium before we pay this claim. So some companies put caps and things on how much you can get. Or they might put stipulations where, you may not buy. I mean, if you die within the first 2 years, it may not pay off, or they might pay a reduced benefit. And so you want to get it as soon as possible. And I kind of remember that situation. I think at that time she was past a certain age.
Oh, yeah. She was definitely in her 80s.
Yeah. And a lot of companies won't touch anything past like 75 or something of that nature. So the thing to do, maybe if there's still a need, is maybe not negotiate, but make arrangements with the I keep saying final home, the funeral homes and the places where they might have services. You can buy pre-need policies and things of that nature to still prepare, where it's not an immediate expense, but it costs to die.
Yeah, absolutely.
Yeah.
That's good. Nick?
Did I answer that question? Was it answered?
Yes.
Okay. All right.
I think so.
Just want to make
So
sure.
good. So much information. How can you begin to build your portfolio for retirement?
So that's a great question. How do you begin is obviously understanding your budget.
Okay.
Right. And I talk about there's a difference in between saving money and investing money.
Mm-hmm.
Saving money is just, hey, not spending it all.
Right.
Investing is because I need this money to grow. Either way, it's going to be spent at some point in time. That's the only reason you should save money. It's so that you can spend it later. That's the only reason, right? So if you're going to invest, you know your money multiplies faster than just saving, and it's for the purpose of spending it later. So how do you do it? You figure out what's your budget, bad word, spending plans, right? What's your limitations on your income, and how much can I allocate on a monthly basis for that purpose, whether that's for down payment on a home or retirement. Once you allocate, or once you figure that amount, then if you don't have like your 401ks on your jobs or something like that, that's the first place I would say. If you have a availability of a 401k or 403b or retirement plan at work, that they usually match your contribution up to a certain percentage, maybe 5% of your contribution or something like that. So I would say start there. Anything extra that's based on your balance, your budget. If you have extra that you can save, then the next step for retirement would be having an IRA, individual retirement account. And then there's two types of retirement accounts. Usually there's a traditional retirement, individual retirement account, traditional, and then there's a Roth. Depending on your income, there may be limitations on which one you can and can't get. You know, if you're highly compensated, there may be limitations on how much you can put inside of a traditional. But the Roth, inside of the Roth, but the Roth will allow you to invest for the future and not have to pay any taxes on the withdrawals.
Okay.
And so no taxes beat taxes.
Of course.
Right? Common sense, right?
Mm-hmm.
But in a traditional IRA, even though it may not be no taxes, deferred taxes are still better than annual taxes, right? And so that's still a benefit if that's your only option. And so that would be the first thing, taking a look at your 401k plan, establishing a deduction from your payroll there. And then if you have something extra, then establishing a retirement account of some type.
Highly, what'd you say? Highly compensated.
Highly
I like that
compensated.
phrase. Highly compensated.
I think I may circle back, but I'm good for now.
Okay. All right.
Okay. Do you got
I'm
something?
here all day. I'm here all day.
I do. Errol, can you explain a universal life insurance plan and under what conditions would you recommend this?
All right. So universal life, there's a lot of talk about that, or IULs, index universal life plans. So again, when it comes to life insurance, I believe that it should be based on those things I mentioned. If you need to take care of kids or parents, if you have debt that you don't want your survivors to take care of, your final expenses, things like that, right? I think that's the real and only reason you should even have life insurance at all. If you don't have kids, you don't have debt, you don't have someone dependent upon your income, you really don't need life insurance other than the cost of a funeral.
That was a question I was going to ask you. Do you need life insurance?
really-
Everybody. Okay.
Yeah, you really don't need it if you have $10,000 to $25,000 in your checking account and nobody depends on you. You don't really have a need, right? And I sell life insurance, so why would I not?
Right.
Right. I'm
Want to
just
sell the
saying.
life insurance.
Right.
I love that.
Yeah. So you really don't
Yeah.
need it.
Yeah.
And so when it comes to a universal life insurance policy or any form of what's called cash value, those products are a combination of an insurance policy and some type of investment. Again, I believe that if you want to, and so most people, when they buy it, they're buying it for the investment. I recommend don't buy an insurance policy for an investment. Just get an investment.
Right.
So what's the difference? And so, I mean, how does that work? When it's a universal or an index universal life, when you make your payment on a monthly basis or however often you make it, your money goes into an investment account. And from that investment account, then they take the money out for the actual cost of the policy. So the investment pays for the policy. And in those examples or those policies, little is it known by the public, those policies increase in cost over time. You may or may not know that. Most people are unaware of that. So they're paying a set dollar amount every month, but the cost of the insurance is rising every year because it's based on an annual renewable term insurance policy. which means that every year that cost of that policy goes up.
Mm-hmm.
So let's say you're paying $300 a month.
Mm-hmm.
Well, in the first couple of years, that is an overpayment of the cost of the insurance.
Mm-hmm.
And so, but in the later years, usually around the year 10 to 15 years, it's actually less than what the cost of the insurance is.
Mm-hmm.
So if you're paying $300 a month, but the insurance is costing $400, where do they get the extra money from?
Oh, the investment.
They get it from the investment,
Oh,
and then over time they just keep pulling from the
pulling it.
investment
Mm-hmm.
Yeah.
a little bit more every year because you're getting
Yeah.
older every year. And then if inflation, investment goes up and down, right?
Right.
So in the down years, the investment isn't performing as it does in the up
Right.
years.
Yeah.
So now they're pulling bigger and bigger
Yeah.
chunks, and at some point later, you got zero.
That's what
Yeah.
I've heard.
It
yeah.
always happens. There's huge lawsuits, class
Wow.
actions. It always happens, and right. And so some agents, some companies will say, "Well, that's because it's not properly structured, or
Mm-hmm.
the mat just doesn't match."
Mhm.
You can structure it however you want. If I'm going to overfund
Right.
Mhm.
the policy so that I can realize that deficit later, why not overfund an investment?
You're
Right.
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 Directly.
That makes more
Directly,
sense.
right?
Exactly.
Yeah.
That makes more
Just
sense.
overfund the investment, and you
Yeah.
don't have all of those additional fees
Yeah.
attached.
Mm-hmm.
Yeah. So that's how universal index, universal life works. They vary slightly from one policy. It might be a whole life policy or even a paid up insurance
Mhm.
policy. But basically, any type of policy that combines a savings account of some type
Mm-hmm.
is usually better to have them separate.
Mm-hmm.
Gotcha.
And that's the only time I don't like bundles, right? Like a combo, right?
Yeah. Let me
So-
let me add this in there because I think it ties. Will you explain the difference between like the whole life and term life?
Yeah.
Yeah. Does that fit there?
Yeah, slightly. So as I mentioned with the index universal life policy, your payment goes into an investment and then it's pinched off,
Mm-hmm.
right? And then it rises up. When it's a whole life policy, essentially your payment goes immediately into two different directions. A certain part of your premium pays for the insurance, a certain part pays for the cash buildup that everybody seems to want, right? I want to be able to borrow my,
Right.
right? But think about that for a second. You get paid monthly from your job, right? Your pay goes direct deposit to your bank.
Mm-hmm.
And then you just make a withdrawal, right?
Mhm.
You put the money in, or your company put the money in for you,
Right.
and then when you want it, you just take it out.
Mm-hmm.
How would you feel if Bank of America, let's say, I shouldn't say names, I guess, your bank. How would you feel if you put money in your bank, and then when you went to get it out, they say, "Sorry, you got to go see the loan officer."
Mm-hmm.
Mm-hmm.
Yeah.
Would you be okay with that? You
Nope.
put $5,000 in your checking account,
Mm-hmm.
and then when you want to get it out, they say, "Sorry, the only way to get your money out is to go and borrow your money that you put in."
Mm-hmm.
Oh.
That's how those policies work.
Mm-hmm.
Yeah.
You are borrowing the money you put in.
Wow.
That would not make sense. Like logically, that doesn't make sense. Never
Mhm.
add up to me, right?
Mm-hmm.
I'm not going to give you my money, and when I come back to get it, you say
Right.
you got to get a loan for it.
Right.
Mm-hmm.
And when you borrow money, what happens?
Interest.
You must pay it back
Yeah.
with interest.
Yeah.
By the way, the interest that they charge you is more than the interest they were giving you.
Oh, wow.
Yeah. And it's written in the policies, every single policy
Wow.
that nobody, that no one
The
reads.
fine print.
Yeah.
Yeah. And
Yeah.
so I tell people what the big print gives, the fine print, the small print takes away.
Mm-hmm.
So when they're saying, yeah, you can see, that sounds like a benefit, right? I can borrow against my policy.
Right.
Did you realize you're borrowing your own money?
Right.
Mm, yeah.
Why would you borrow your
Borrow
own
your
money?
own money, yeah.
And some people just say, that's fine. And I'm like, that's dumb. Because why would you want to borrow your own
Yeah.
money?
Yeah.
And so, and specifically with the whole life or cash value policies like that, the other problem or fault that I find in those policies specifically, slightly different on the universal life policies, but on a whole life policy, whatever amount is accumulated in the savings account attached to the policy, they keep when you die.
Mm.
So there's yeah. So let's say you got let's say you got $100,000 life insurance policy and the cash buildup is $20,000.
Mm-hmm.
The minute you die, they keep the full balance. But how did they get that money in there? It's from your premiums that you paid. So they keep it if you die. If you want it, then you have to borrow it
And pay it back.
and
'cause
pay it
it's a-
back
what in the
With
world?
interest.
with interest. So
That
the
is
only
interesting.
possible way to get that money is to cancel the policy.
Mm-mm.
and I don't have. So you're paying for two things and only get one.
Mm-hmm.
Wow.
You're paying for the insurance and investment, right?
Mm-hmm.
But if you die, they keep the invested part.
Mm.
Wow.
If you live and you want the investment, you either have to get rid of the insurance to get it without having to borrow it, or you either have to borrow it and pay it back. And they'll say, oh, but you don't have to pay it back. Well, then they're going to subtract it from the debt benefit.
Wow.
Mm.
So you think, and that's why I think a lot of people feel bad. You know, they have ill feelings about life insurance because grandmother had this policy all of these years.
Mhm.
And when she
Mhm.
died,
Mhm.
it was nothing. Now that's because grandmother was taking policy loans,
Mm-hmm.
maybe just borrowing or skipping a payment.
Mm-hmm.
You know, old school ways. When I, mention them from New Orleans, and you see the insurance man going door to door,
Mm-hmm.
and sometimes the older people didn't have all of the money,
Mhm.
and so they said, "Don't worry about it. We'll take care of it." Well, how they're taking care of it is borrowing the money that's inside of the policy to cover the premium,
Wow.
which is good because it keeps the policy in force, but it also
Takes away
reduces.
from- Yeah.
That's why they have the policy so many years and
Mm.
wind up with nothing.
Mm-hmm.
May
Yeah.
I ask a question
Of
just to
course.
clarify? So is this what you're speaking of now? Is that whole life or what was it?
Yes,
Whole life?
that
or-
would be whole life.
whole life. Okay.
Yeah, in the category of cash value. So
Okay.
anything that combines insurance and investment
Okay.
operates in that manner or slightly different depending on the type.
Okay.
Now, a term life insurance policy is as plain as anything else. It lasts for a particular amount of time and then it doesn't.
Mm-hmm.
So,
Okay.
and some people say, well, I don't like that because it expires. Well, you're okay with that when it comes to homeowners insurance. It's a year and it expires.
Mhm.
That's a
Yeah.
good example.
Your car insurance is 6
Yeah.
months and it expires.
Yeah.
That's true.
Health insurance is an
Yeah.
annual thing, right?
Yeah.
Why are you okay with all of these other ones, but for some reason you want something back on life insurance? Because people say, oh, yeah, but I don't get anything back. You don't get anything back. And so how I explain that is if you have Netflix and don't turn it on, does Netflix give you any money back? You don't.
Wait for it.
No. Netflix like, hey, we provided the service.
Right.
You didn't use it. That's how insurance is. They
Mhm.
provide the service. Thank God
Mhm.
I
You
didn't use it. I
it,
didn't
yeah.
die.
Right.
But you shouldn't get anything back
Right.
because you paid for access to that policy if you died.
Mhm.
You didn't die, it's fine. I've never had an at-fault accident. I've been driving since I was 16.
Mhm.
I've never had my policy pay for my benefit. I don't get any money back.
Right.
Mhm.
So why do we need money back on life insurance? That's the industry that makes us think we should get something back
Mhm.
because they get more money by charging those policies. A term life insurance policy costs probably 1/3, maybe 1/4 the price of one of those other policies.
Mm.
Mm.
And so those other policies are packed full of commissions and fees for the company.
Errol, we love you.
Yeah.
Hey, I love you too. I love you too.
I've
Yeah.
never heard anyone explain
Explain
like
it that way.
Yeah.
Yeah. Yeah.
Okay, one more just point of clarification.
Yes.
So are you saying that, was it the UIL?
IUL, yeah,
IUL.
Index Universal Life.
So it has an insurance and investment kind of combination,
That's correct.
similar to whole life has the
Insurance.
insurance
Mhm.
and investment combination. So are you saying that those are, how do I say, those are not great?
Those
to-
are not great.
Okay.
I call
Not
them
great.
trash value
Oh,
policy.
there you go. Trash. value. We don't want trash.
We don't
Yeah.
want trash.
Yeah.
Bubba Dub say trash.
Trash. Yeah. Trash.
Okay.
And it just deals with, there's some, having them separately, they operate better.
Mm-hmm.
And it's reduced cost having them separate. Like I said, we're conditioned to having a combo. I want my cell phone, my internet, and my
Mhm.
cable with one
Mhm.
company. I want my combo meal. This is usually packaged
Right.
things cost less,
Yes.
but in insurance world, it costs more.
Yeah.
Mm.
Wow.
Yeah.
I just feel wonderful.
Me
Right.
too. I do
mean,
too.
This is, thank you.
You're welcome.
Yeah.
Okay. I'm excited.
We are now informed.
We are. Yeah.
Absolutely.
The more you know.
Ignorance is
Yeah.
expensive. Yeah.
Yeah, it is.
Ignorance is expensive.
It
It
is.
is.
So,
Interesting.
you already said not everybody needs life insurance. Talk about those that have, that do have those that depend on them, but the only life insurance that they know of is their group life.
Yeah.
Yeah, talk about that.
That's a great topic because that's the challenge that I see, that people think they have it on the job.
Mm-hmm.
And when I say the word think, they may have a policy. They see that their premium is being paid through their paycheck, but they've never seen the policy.
Mm.
You got a certificate or an employee handbook that says, hey, you're an employee of this company, you have life insurance.
Mm.
Have you ever seen the policy? So the first thing I recommend people do, request a copy of the policy from your job.
Okay.
Usually when you get a copy of the job, read it. And in a lot of cases, for corporations, it's different with government jobs, maybe, the city government, federal government, those may be okay. But for just a normal corporation, a lot of those companies have stipulations on their life insurance.
Oh.
Like you must be an active employee.
Uh-huh.
And they have their own definition of what is active.
Yeah.
It could be the number of hours you work prior to dying.
Mm.
It could be whether you're on a remote location, maybe you're not. Like they have their own definitions. Think about it. And it's two small examples that I think hits when you think of common sense. Think about GoFundMe for a second.
Mhm.
There's a lot of people using GoFundMe.
Right.
Were all of them unemployed?
Mm.
Like nobody had a job?
Right. Probably not.
Like
And
if
you're talking about the deceased person.
yes, the deceased. Like they didn't have a job because
Right.
job insurance, right?
Yeah, yeah.
If job insurance paid, why is there a GoFundMe?
Mm.
So that means that everybody on GoFundMe was unemployed.
Mm.
Yeah.
They didn't have a job. No, they had job life insurance, but job life insurance doesn't automatically pay.
Mm.
I saw one recently that, again, they have to define the active employee. But then you go down and you see what defines active employee. It's the number of hours. So if you have not worked, if you're out on sick leave, you're not an active employee.
Oh, wow.
Mm.
So now I know 2 real cases of people who went to work and died at their place of employment.
Mm.
But most people don't die like that. Most
Right.
people go to work, they're not feeling good. Then they go home, they go to the doctor, and then for some reason it's serious. They don't
Mhm.
come back to work. Well,
Mhm.
it could be weeks before they get back on the clock, right?
Right.
That's just reversed their qualification.
Wow.
Wow.
Yeah, I saw there was a story on the news a couple years ago about a Plano school teacher, and he had cancer, and the summer came, and they did everything. They verified that he had life insurance, right? And everybody told him yes. He goes to school the first week or 2 of school. I think it was the first week, and he wasn't physically able to maintain, so he retired.
Mm.
Well, he retired, and shortly after that, I can't remember the time frame, I believe it was like a month later, he died. And they denied the claim because there was a stipulation that was entered in over the summer
Wow.
Mm.
that required him to be at work. Like he needed to be at work like 2 or 3 more days into the new school year.
Wow.
And it made the news, which is where I saw the story. And the company was like, sorry,
What the hell?
they're not.
Wow.
They're not. It's a sad story, but
Yeah.
Yeah.
that's the contract. And that's why I'm saying, like, if you don't see the contract, you don't know.
You don't know.
And the HR person don't know. You need to see the policy
Yeah.
and read it for yourself. And also know in those policies, they have the right to change them at any moment without your consideration.
Mm.
That's why job, group, life insurance is so cheap.
Mm.
Mm.
Right? It's like a couple dollars a month.
Yeah.
Well, when you think about it, if you're going to pay somebody's salary, right, because that's usually 1 or 2 times their income, or maybe 3. If you're going to pay that, if I'm the insurance, if it's me,
Mm-hmm.
and I say, hey, I promise you when you die, I'm going to pay your family 2 times your income,
Mm-hmm.
wouldn't I charge you more?
Yeah.
Yeah.
If I'm going to
Yeah.
truly pay.
Yeah.
Right. Right.
Well, that's why it's so cheap. It's not
Mm.
cheap because you're a part of the group. It's
Mm.
cheap because they're less likely to pay.
Mm.
Oh, my God.
If it was cheap because of the
Wow.
group, wouldn't health insurance be even cheaper?
Wow.
Because health insurance is a
One would
lot.
hope. Yes.
Yeah.
That
It's-
makes so much
Yeah,
sense.
if a
does.
company is going to,
That's so sad.
if an insurance company is going to pay, it's not necessarily going to be cheap
Mhm.
unless there's some type of exclusionary clauses, which is why, sorry to belabor this thing,
this
this
is good.
topic,
Mhm.
but like accidental death.
Yeah.
Why is accidental death so cheap? Because you're probably not going to die by an accident. And accidental death
Mhm.
literally mean die in an accident. Now we know people do, but the
Right.
percentages are very low, which is
Mhm.
why it's so cheap.
Mhm.
Wow.
Yeah.
Wow.
Oh my goodness.
I want my money back.
All of it. For all of those years.
I know.
From
'cause, you
every
know,
employer.
There's some
Yeah.
companies that offer your employer, like, I don't want to call any names, but they offer like the accidental death or policies like if you get diagnosed with cancer, all of that kind of stuff.
Yeah. And again, I'm not saying that they won't pay. Let me just clarify and be specific.
Hardly likely.
There you go.
Yeah, I get it.
And so the more you know, so don't just assume that they will, because most of them won't. Now, the cancer policies is different than the life insurance policy. Like the sicknesses, that's slightly different than the life insurance. Specifically, the life insurance policies, you just have to find out, hey, does this pay no matter what? Some of them do, but more than half won't.
I'm going to call mine.
Yes.
You going to call him now?
No, not now.
Got the phone out.
Hello.
Y'all.
We live.
We live right now.
Will you pay? Yes or no?
Yes or no? Check yes or check
Yeah,
no.
get a copy. Like I just tell people, just get a copy. When you're doing your benefits every year, request a copy. And just know that even though you have that requested copy, they have the right to still change it. But at least you would have an idea. And you might feel comfortable with that. But the primary thing for life insurance is take advantage of that, but have your own.
Yeah.
And that's the priority. Have your own that you're in control of. And the extra would be fine if they do pay. Nobody's going to be upset of having more money coming into the family. But have your own. And life insurance costs less than people think that it does.
Man, and you can bring more money home because you're not paying
into
that premium.
That's right.
Into that policy.
That's right.
Yeah.
Wow.
Yeah.
Nikki, you want to do a journal prompt real quick? Okay.
Because I have more questions.
Man.
Oh my goodness. Okay. Journal prompt. What habits, fears, or mindsets must I change to become a faithful steward of my finances and legacy? I'll repeat it. What habits, fears, or mindsets must I change to become a faithful steward of my finances and legacy?
That's good.
Ooh.
I'm going to say this already. You got to come back.
Okay.
Right.
You for real. Because I think that there's so many more questions. Not that we're done yet, but there's so many more questions that I know will come to mind for me. Let me just talk about that.
Yes.
Yeah, because my brain is just turning right
Mine
now.
is too.
Yeah. Okay. So, Nikki, I know you had questions about retirement because you are preparing for that.
I am.
Yay.
Woo, woo.
So I was just looking through my questions and I have more.
Okay.
Wait, let me find
I
it.
charge by the question, by the way.
Now you tell us.
Oh, yeah, I forgot. Hey,
We will buy lunch.
hey,
Will we?
it's like, will we?
It's not in my budget.
No, my what did you call it? Not budget, but what?
Yeah, spending plan.
Spending. Yes.
It's not in my spending plan. How much should I? Well, this is a separate question. You mentioned earlier about an emergency fund.
Yes.
So what portion of your income should you put towards your emergency fund?
So I think that's an individual question, but more than the percentage towards it is what the balance should be.
Okay.
Okay.
So first thing I would say, at least get $1,000. There's so many people that don't have even $1,000 in an emergency fund. Like a real emergency, don't touch it. It's not your spending account. It's not your vacation account. It's not when you get an alert from a sale.
80%. Let me go get this money.
I wasn't saying anybody. Just somebody on my left.
Who's guilty?
It's not for that. It's for an emergency. And so have at least $1,000 and then build upon that. Now, $1,000, again, there's different size emergencies, right?
Right.
It can be, I was thinking, being from New Orleans, I was here before Hurricane Katrina, but I was here 2 years before Katrina here in Dallas. But my parents and my family, they weren't. Nobody was expecting that, even though it happens every year. So a lot of times a catastrophe can be, emergencies can be all shapes and sizes. That's my point. It can be a medical, it can be a job and things of that nature. So have that and then set a goal that maybe get 2-3 times as much of your living expenses in that account. And then once you have that, then I say maybe like that needs to be done with urgency. Like if you don't have that, try to hurry up and get that even before you really start attacking investing and things of that nature. Like at least that, because we don't know when the emergency is going to happen, right? And
Should
so
that be kept in liquid funds? Like, should you have this cash at home? Is that?
I'm okay with that.
Okay.
If you got discipline not to use it, right?
Absolutely.
Because of course it's better to not have it at home, but I'm okay with having some of it at home.
Okay.
And because using that example of like a hurricane or something,
Right.
Good point.
yeah, banks are
Yeah.
closed.
Right.
You know what I'm saying?
Exactly.
Like banks are closed. The systems might get locked out. So I'm okay with having some portion of your emergency in cash at home. But then you just build upon it and get at least 2-3 times your living expenses, like with urgency. And then once you have that, then maybe shift the amount that you're allocating towards savings in general, all savings, whether that's saving for vacation, retirement. Everybody has a budget amount. Like, what's the amount that I can put towards savings? Whatever that dollar amount, then we can dissect, okay, this portion can go towards emergency, this portion can go towards retirement, this portion can go towards college planning. Whatever it is, you still have to have a budget amount, a line item amount of the savings budget, and then determine. So I don't have a percentage. It just depends on what you're saving up to and what for.
Okay. That makes sense.
Absolutely.
Okay. I hear gold is a great investment.
Do you? Okay.
Okay. Say more.
Like, do you?
Because I've heard where people are buying gold because it never loses its value. So can you address that?
So I got to say this disclosure. These are the statement opinions of Errol Myers and not of Successful Beauty.
We say that at the beginning of the show too.
Right.
Absolutely.
Well, when you look at the historical performance of gold, the numbers, the percentages are high right now.
Okay.
And metals and minerals tend to have a good value. Now, would I just only invest in that one thing, whether that's gold or cryptocurrencies? No. I would say everything can be a part of the strategy,
Right.
but to me, everything starts with the goal in mind. What is it that you're trying to accomplish, and what time frames are you trying to accomplish them in? And each investment has a measure of risk. And believe it or not, a savings account has a measure of risk. Like, people don't think that, right?
Yeah.
You know what that is? The
No.
risk is it won't beat inflation. Inflation,
Gotcha.
right? So that your risk minimizing your buying power in the future if you only put money in a low interest account. So there's risk involved with everything. And so if you're asking like gold is up. Gold is typically something that, long term has had high yields. It peaks and then settles down like everything else does. And so if a person say, yeah, should I put all my money in that? I would say no. If a person says, should I put all my money in crypto? I would say no. Unless you just really are just trying to swing for the fences and all of that stuff, and you're okay with the outcome of it being a total loss.
Right.
But gold in its general sense, and the minerals in general, oil, those things are necessary going forward. And gold does hold a value for a long time.
Okay.
Yeah.
So is that a yes? Thumbs
That's
up?
a roundaway yes.
But not like have multiple streams of investments.
Yeah.
Not put all your eggs in one basket.
Exactly.
Which makes
exactly.
sense.
And there's different ways to invest in gold
Mm-hmm.
and other things as well. But so I'm not knocking it.
Okay.
Like, I'm knocking the insurance conversation. I'm
Okay.
totally
Right.
against those.
Okay.
Right. I'm not
Gotcha.
knocking that at all.
Okay.
Yeah.
Okay.
Tell me about like agricultural investments, or livestock in particular. Because I had a client several years ago, just came to mind, and he invested in that a lot. And from what he told me, he made lots of money. Now, I don't know if that was just because it was a long time ago, or if that's like a really good investment.
So I guess specifically I would want to know, like, what did he or she invested in? Did they buy a plot of land and put cows and, livestock on it, or they invested in a company who had it?
No, I know that he had land and purchased livestock.
Yeah.
I know that.
So what I know about that,
Okay.
right, would be that there's a lot of tax benefits of doing that. And so a part of an investing strategy is minimizing the taxes that you're going to pay on the growth of your money, right?
Because What?
Amen.
Amen. And amen again.
Yeah. And so, like, if you had a land and you can qualify for farm use, that comes with a lot of benefits, and the government actually pay you money to maintain those type of things. So, as an investment, yeah, that can be, a wise investment. Yeah. Yeah. I'm sure that I don't know a lot of details of it. I know some people that actually do it, and what I've learned over the years is that those are the benefits. Like, you're asking me what percentages and things like that, then I would need to research and get back to you on the next episode.
Yes.
Yeah.
With the fee, of course, because he charges for
A charge per question. A charge per question. By the way, to anyone that's reaching out, I don't charge for conversations and things like that.
Okay.
Feel free to reach out. I will work with you. And like I said earlier, I love what I do. And, I think when we first met, I had spoken at the church, and you were surprised I didn't charge.
Right.
Yeah. It's like, you don't charge anything? Right. No,
Right.
The benefits will come to me. And they have been 30 years. I don't
Come
have to
on,
charge
Faith.
anything.
I
Yeah.
know, right?
Yes.
Being a good
Yes.
steward.
Yeah. Yeah.
Yes, he will give to you.
Mhm.
What are living benefits?
Living benefits has to do with life insurance, right? So there's policies that you can attach certain things like critical care, long-term care, and if you happen to develop, a disease or something of that nature, then what they would do is actually pay you a portion of maybe the policy while you have that care. So, so if you become terminally ill, then you might be able to access some portion of the debt benefit of your policy for that illness.
Okay.
Yeah, and some policies have it. You don't necessarily have to have it in the policy. Like, I think that's wise to have like nursing home features and things of that nature, especially single women who may not have spouses or kids, or you may not have someone that's going to be able to care for you. Well, nursing homes cost a lot of money, and so having plans in place, that can be beneficial in some regard. Yeah. So living benefits basically are those things that you're living, you're alive, but you're using your policy to some way pay for those things.
Some of the things you need. Is that, I hate to use a name, but this is the only thing I know. Is that like an Aflac?
Yeah, that's they do like short-term disability
Okay.
policies, and so if you break your leg and can't go to work, so it's like disability income replacement policies would be what they're famous for.
Got you.
So
Okay.
if you got sick or injured, then that's what those policies, and that, I guess, to some degree that would be considered more. But more people, if they're saying living benefits, they're more talking about like the catastrophe type things, like cancer, and sometimes they'll even name specific cancers and things of that nature. Yeah.
Okay. Interesting. Okay. Yeah, we definitely have to have you back.
Yes.
Yeah. I got 10 questions in my head right
Without
now.
interest, though.
Without interest.
Right.
Yeah. Okay. We got to stop though. Right.
We're just getting started.
We're just getting
Right.
started. Absolutely.
Yeah.
Okay.
Wow.
Tell our audience again how to reach you if they're interested in having that conversation and then moving forward with you,
Yeah.
where there actually is compensation made for you onto
Yes.
that portion.
Yes.
How do they reach you?
I would say the easiest way just to either find me on Instagram, and that's it's Errol, not Earl. That's ITSERROLNOTEARL. So it's Errol, not Earl. And of course, we talked about how people call me Earl. That's why. But anyway,
And he
that's
repeated
that.
And he has a cousin.
And he has a cousin.
But not you, Earl.
But that's not that. We're not cousins, I don't think. But I do have a cousin. So that, or send me an email, and that's at it's easy, moneytalks@gmail.com.
The letter E, the letter Z, money talks
Yes.
at gmail.com.
At Gmail.
Yes. Very good. Errol, thank you so much.
Thank you
Yes.
guys.
Appreciate
This was
you.
good.
This is
Yeah.
excellent.
Yeah, I appreciate it.
Yes.
Yes.
And if you guys have any questions for us that you'd like for us to address on the show, or if you have a comment or just a statement that you'd like for us to discuss, on the show, send us an email at successfulbeautifuland, that's AND, @gmail.com. Don't forget to subscribe, like, and share, and tell your family and your friends and your neighbors and everybody, your enemies, tell everybody about us, because we have information here that will change your life.
Yes, as you can see.
As you can see,
Yes.
absolutely. Anything else? Nope. You guys have an amazing day, and thank you for watching Successful.
Beautiful.
And
Bye.
The content shared on this podcast is intended for informational, educational, and entertainment purposes only. While one of our hosts is a licensed professional counselor, the information provided here does not constitute a therapeutic relationship, nor is it a substitute for individualized mental health treatment or diagnosis. Listening to this podcast does not create a client-therapist relationship between you and our hosts. Any stories, examples, or discussions are either fictional, generalized, or used with permission for illustrative purposes and should not be taken as personalized therapeutic guidance. If you are in need of mental health support, we encourage you to consult with a licensed mental health professional in your area. If you are in crisis or experiencing a mental health emergency, please contact 911, your local crisis line, or 988, the National Suicide Crisis Lifeline. Thank you so much and enjoy the show.